Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 8th of January 2016. It is non-farm payrolls day. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the news as always. You notice it's the same routine, same exact routine every day. The key news right now, the U.S. December change in non-farm payrolls came in at 292,000 versus 200,000 expected. Change in private payrolls, 275,000 versus 201,000 expected. Just a blowout number. And I have to be honest, the expectation. I was really expecting it to actually be just below to disappoint somewhat. So I was completely wrong there. But that's how things are shaping up. The other thing that was a smash on this number is the prior change in non-farm payrolls was revised higher from 211,000 to 252,000. 211 to 252. Even more, the private payrolls from the prior was revised higher from 197,000 to 240,000. Just mind-blowing numbers and revisions. Shanghai's composite surged to a gain of 3% before plunging to a loss of 2% within the first 15 minutes of trading. The bottom was put in amid speculation that the country's national team is coming in to support stocks. The Shanghai composite finished up 2%, its best gain in over 3 weeks. Bank of America's Merrill Lynch says the commodities rout is the worst since the 1930s. And then finally, you might have heard this yesterday, Saudi Arabia's oil giant Aramco might be going public. It's this giant. It's basically a behemoth in the oil industry. There's discussions that it'll get listed on a public exchange. The Saudis say that Aramco is worth trillions of dollars. Curious though, if it's worth trillions of dollars, why does it need to go public? Generally, companies go public to raise money. So very odd there. Um, as far as what's ahead, we still have U.S. wholesale inventories at 9 Central, 10 Eastern, just a half hour after the open. For November, expecting negative 0.1%. Wholesale trade expecting 0%. Then we get Baker Hughes at noon Central, 1 Eastern, no expectation. And then consumer credit at 2 Central, 3 Eastern, expecting 18.5. As far as speakers, 10:30 Central, 11:30 Eastern, we're looking for Fed Speaker Williams on Outlook in Santa Barbara. And at noon Central, 1 Eastern, we're looking for Fed Speaker Lacker in Baltimore. That's what's on deck for today. Let's take a look at what's going on with the markets. So yesterday was fairly standard, I'd have to say, for these days. Um, the expectation for yesterday, if you were here, was for an open auction out of range. That's what this looked like, but actually it had a driving. It had a drive. It looked more like an open test drive. We were looking for yesterday. We were looking for responsive buying back towards the prior day's range, and then overall for the market to rest on the sell side. That was the key hypothesis yesterday, and it did that. Um, it pushed to within 6 ticks of the low of the prior day, the low of the prior auction, but it did drop pretty hard down into the 1935 and below, and then it recovered a little bit. We had another neutral day. The probability of another neutral day yesterday was very low. I've shared the image of that on Twitter. And we ended up struggling to take back the initial balance low, this yellow line, and getting back into the initial balance. and it spent the afternoon just seesawing back and forth, and then finally making a lower low. The close was very interesting. The close had had this run from the low up to almost 45 and back down to 28.50. This is a very, it doesn't look like much, but it's pretty strong. 15 points up, and then 12 points down, or 17 points down on the close. Uh, it's pretty violent. The overall day type here is neutral extreme down. Um, and so let's look at this on a bigger time scale here. Let me turn down my alerts. Russell's making lows. So here's what's happened in the beginning of the year. So what we have is a gap down, 2 days of balance here. So gap down, an attempt higher, consolidation for balance, and then this is basically acting as a balance zone. And then it gaps down, tests the low of the prior day, is still in balance, breaks through, and comes back in. And then yesterday, gap down, test the low, and break lower. Very weak, still very weak. On Tuesday, I really expected coming into Tuesday after Monday's session, I really expected this to start running back up like we've seen so many times. Monday looked like a really good base, especially in the way it closed. Very high volume on the close, very high delta, gap up, and it attempted to close the big gap on the close. The expectation was to continue overnight and then to start walking itself back to 2072.50, our key balance area. And once we broke lower on Wednesday, so it looked like things were holding up on Tuesday. Once we broke lower on Wednesday, uh, it 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 started that whole context changed, and it started to look pretty ugly as we continue to push lower. So overall, tough read, tough read. Tough read for those who are looking for which way this thing is likely to break. We had a neutral day here, a break of the high and low of the initial balance, neutral day here, break a high and low in the initial balance, neutral day here. This is a neutral extreme high, neutral normal, neutral normal, neutral extreme low, and then we're bouncing up with the non-farm payroll release. The market clearly has a higher time frame in action, but is fairly confused about what the direction is. We've been basically following China's lead all week, including in the bounce yesterday afternoon and this morning. Of course, non-farm payrolls put in a different story here. You could see how it started to already bounce on the China Open, on the Asian Open, with the news of that news that some national support team, I guess it's uh, uh, their plunge protection team or something, uh, kicking in, and the trade basically mimicking what the Asian markets are doing. Um, and then stabilizing after that. We spent most of the morning stabilizing in anticipation of the non-farm payrolls number. Generally, non-farm payrolls, the overnight session ahead of the non-farm payrolls is very tight, very low volume. Our volume overnight, 559,000. That's extremely high. That's about 5 times the norm. So there's a lot of action going on. The action has moved from Europe, um, with Asia being completely dead, to Asia and Europe being fairly stable except for the DAX, having taken just a kick to the teeth over the whole week. And then non-farm payrolls come in, and the scene of the crime for non-farm payrolls is 1951. The number took off, was initiated right here, and as the trader bite started, we were back here and still higher, hadn't come back to the scene of the crime, and now we are at the scene of the crime. Note that even though on a candle chart we have what looks like an excess high, this is not an excess high. This is a slightly weak high. Why is it a slightly weak high? Because of the amount of trading that occurred at the top. This should not have happened had it been an unfair high. An unfair high does not bring in a lot of volume. People don't want to participate when prices are unfair. So the fact that we have a small HVN at the top tells me that this high is pretty vulnerable, although the market is on its way to test lower, having finished on the upside. But this is a high that I'm going to mark as weak as part of the non-farm payroll stats that I'm keeping, and and it's in the middle in the bulk. The shape of the overnight profile says that the market has not reached any consensus on value. It is basically floating around and trading the entire range between the 47 and 60 range, and that's where the bulk of the volume is. There's no real consensus on price. There's no real agreement. If there was an agreement, you would have a Gaussian profile with a point of control that's very prominent. But you can see the point of control could easily move from here to here. So there's likely, what that tells us. What does that mean? What that tells us is there's likely to be continued two-way action on a higher time frame coming into the open. Just to be aware of that. Again, my plan, as it has been for the entire week, is to let the Titans fight it out on the open and see who is likely to be dominant. Just a quick opportunity to go over what that looked like yesterday. I was asked, I did an AMA yesterday for Stage 5 traders, and somebody did ask, a guy named John asked, what does that mean to wait out the open and see who's in control? And my answer, I thought, was important to share with you. What does that look like to wait until we find out who's in control? And so I'll go over that here for a second. This will take a minute. So essentially, we had an what looked like an open auction in range or out of range. It turned into a test drive. We have a drive here. There's nothing here, even though the market's moved quite a bit, 11 points from 45 to 56, and then chopped around and continued to move higher into 60, 75. There was actually nothing to do here. This is the first 20 minutes of trading. Here's 850 right here. The first time I can act is actually right here. I checked my S5 bookmap to see what the order flow looked like at this area, and this is the first opportunity that I had to get on. And the idea is that we would take out the initial bounce high on this impulsive move up. So even though it moved quite a bit at the open, and there's an urgency, a natural urgency for everybody to do something with that. Oh my God, I want to catch this as soon as it opens because we are expecting responsive buying today. I can't get on here because I don't trade breakouts. I'm not interested in trading breakouts. Now, if the market starts to lose its floor and just throw up every second of the day, just like in 2008, I will trade breakouts pretty aggressively. But for now, I'm looking for the market rotations and reading rotations in order to assess what my risk should be. And so there's nothing to do until we reached this point here. Now going forward, we're taking a shot at the IB high on the pullback. So it made this temporary IB high, temporary high at 60.75 on an impulsive move. The idea is it pulls back and it's likely to take that price out. And there it is. So we're looking for this area to hold, and we're looking to take it back into this area and leave a runner on for a test of the prior day's low, which you could not get by 6 ticks. That's what I mean by just sitting out, relaxing, letting the market tell you what it wants before you go nuts on the open. It's difficult to trade on the open these days given the higher time frame in action. You can get run over fairly quickly, especially if you're using small stops and are trading a small account. I just wanted to demonstrate that for a second and let you know what that means. Now, shoot, I didn't go over my hypo. The initial hypo, we're opening in yesterday's range in value. We're opening right in the point of control or the value range of the overnight. I'm expecting this to be very choppy. The expectation is it's likely to be responsive down to 1940. Chop around here and likely to recover some and potentially test the high volume node at 1955 again. There's not much more I can do with this for now. There's news flow that's coming out throughout the day about the economy here and in Asia, and it's interfering with the trade somewhat. So I, that's basically the normal pattern is the market's likely to test its most valuable price from the prior day to complete the auction. And I think it's likely, my expectation is it's likely to base and then try higher, try to push higher from there. That's primary hypo. I'll leave you with that. I'm over my time. It's Friday. It's a good idea to make sure you keep your risk tight. It doesn't mean that you don't trade, but try to take your losses at the lowest um, quantity possible, or taking your daily loss limit at the lowest quantity possible. Your goal is to take as many chances in the market at the lowest risk possible. That's your goal. That's how your edge comes in. That's how your edge shows up. If you start piling on to one trade and adding and adding and adding, there's no chance that your edge will show up, in my opinion. So, in addition to the fact that we're heading into the weekend, as always, it's better to be picky today, especially given its non-farm payrolls, and the larger participants are likely to leave early today, as they often do. But we'll see. The circumstances are pretty special these days. Good luck, and I'll catch you on Monday. Take care.